together. And it's truly a privilege to have Karthik, Rajesh, Jitendra to talk about a very pertinent topic, which we think is going to change the face of entrepreneurship itself. Maybe zooming out a bit, TIE, as most of you are aware, is a nonprofit with the sole mission of fostering entrepreneurship. All of us are volunteers here, trying to figure out how we can really remove obstacles in the paths of entrepreneurs so that we could see more successful, scaled entrepreneurs who can go on to create more jobs and add more zeros and trillions to the economy as we go along. In that context, we are also delighted to be, and this talk is a series of conversations that we've been having as a part of the Road to TIE Global Summit 2024, where we partnered with NuVentures, thanks to Venk's support, to make this happen. This, I think, Venk is the third in the series that we
third in the series, which has all been very well received.
Very well received conversations, and this is something that we've been looking forward for a long time. Essentially, every year, all the chapters of TIE, we now have 67 chapters across 16 countries. We converge every year in one city to celebrate entrepreneurship, to kind of meet people from other ecosystems. And this year, it's happening in Bangalore between the 9th to 12th of December. Actually, 9th to 11th in Bangalore and 12th in Mysuru. And we're really talking about this to be the Olympics of entrepreneurship, where we're expecting close to about 10,000 plus attendees to come in from across the world, happening 10 days from now. So we're all gearing up for that. But as a context and why this is so topical, when we started talking to entrepreneurs about 6-8 months ago on what should be the topics that we should focus on, 4 themes emerged. And the question that we asked was, what are the themes that's going to impact every entrepreneur, irrespective of what they do? And 4 things emerged. One was, of course, the future of intelligence and AI. How will that work in the context of every entrepreneur? 2 was the future of climate change and how climate is going to impact and create opportunities for every business. Third, of course, was future of talent and how will talent get shaped? Where will the young talent come from? What skills will they come from? And fourth, obviously, was future of money. And what will be the future of money? How will it look like? Will it be cryptos? Will it really have any borders at all? Will currencies be gone 10, 15 years hence? And how do, as entrepreneurs, look at raising capital itself? And the entire theme for the conference and the conclave is built around these 3 or 4 questions. All, of course, under the edifice of putting entrepreneurship first. How do we help entrepreneurs to navigate across all of these disruptive cycles that are out there and make sense? So, we have a packed agenda over 4 days. We have over 350 odd speakers. We have 40 sessions, all happening at BIC and the global and the Infosys campus in Mysore. So please do look up tgs2024.org and be with us on the 9th to 12th. But as I was mentioning, this webinar today is particularly interesting because this is one of the pillars of conversation that we're having at the conference. And that's why when Venk and NuVentures and TIE were planning this, we said, let's have it as close to the summit as possible so that conversations from here can flow into the main stage and tracks that we have. So thank you, Venk, for supporting us, and Karthik, Jitendra, Rajesh, delighted to have you with us, and look forward to a scintillating conversation the next hour.
Yeah.
Okay,
Ritu, do you have anything to say?
Yeah, very quickly, welcoming all of you to this amazing third and final part of the Road to TGS webinar, which is being hosted by NuVentures in collaboration with TIE. Just a quick introduction. I'm Ritu Sharma, Executive Director of the TIE Bangalore chapter. So this is a webinar which is in a run-up to the TIE Global Summit, which Madan just spoke about. And this is the third one in its series. The webinars are all linked to the TGS 2024 theme, which is putting entrepreneurship first, wherein we are aiming to create a very, very inclusive entrepreneurial ecosystem. We're bringing together, while Madan spoke about the sessions, but a little bit on the audience, we're bringing together all of the leading entrepreneurs, investors, policymakers, to discuss and engage on key developments and issues across sectors and globally. And, how do we understand the journey of an entrepreneur, journey and challenges much better? So on that note, I now hand it over to Venk Krishnan, the founder of NuVentures, a seed stage fund with 4 unicorns under its belt. Venk is also the founder and CEO of NuWare, a financial services focused IT company based in the US. Again, a lot of gratitude. Thank you, Venk,
Thank
and
you.
Monica and the team, and all the speakers here to join us today. And looking forward to this amazing conversation. Over to you, Venk.
Thanks, Ritu. But I do want to add, that Rajesh has informed me that he's a little under the weather, but he's going to join as long as he can. He's still a bit sick, but we'll go on till he's able to participate. So with that said, so I want to go on. See, I was at the Global FinTech Festival in Mumbai in August, and a common statement among FinTech founders was how much RBI and other bodies, such as NPCI, are innovating, sometimes even before the FinTechs do, which is why it's surely an honor to have none other than Mr. Rajesh Bansal, CEO of Reserve Bank Innovation Hub, which is like a startup under RBI. We can discuss some key innovations in the Indian banking space. With that, I'm going to start the first question to Rajesh. Rajesh, question to you is: India is already known to have the best digital rails. What I want to know is how are RBI and the RBI Innovation Hub going further in using tech and AI to make financial services more inclusive across different cohorts, including the rural farmers, Gen Z consumers, senior citizens, etc. How are data analytics and even Gen AI being used for more customer insight and personalization? Rajesh?
Yeah. Thanks for having me. I hope you can hear me clearly. Right?
Yeah, we can.
So I'll just speak on behalf of the Reserve Bank Innovation Hub and not the RBI, just to make it clear. So on behalf of the Reserve Bank Innovation Hub, see, as a founding team of Aadhaar from 2010 to 15, as you said, the best digital rails, yes. Best ID rails, yes. Best payment rails, yes. Has it really transformed financial system? Yes, it has led to, a number of unicorns because of what Aadhaar enabled and a digital KYC. Has it really solved for 1 billion people is the question that we are trying to address. How can technology be leveraged, including AI as one of the tools, to ensure, and our mission is frictionless finance for 1 billion Indians. So I'll give you some examples, and I'll also talk about the cohorts that you mentioned. That, is opening a bank account as easy as it should be? No. Is my re-KYC that easy? No. I'm talking about myself, forget Gen Z. People like Jitendra are making it easier for them. Taking a loan of $100,000, which is about $1,500, is it that easy? No. We have done tons of studies, primary research, secondary research, looked at the customer journey. Unfortunately, despite the fact that we have a lot of digital enablers that exist in India, the financial services sector has lagged behind in reinventing itself, in leveraging, and I am mostly talking about the legacy financial institutions like the banks. Fintechs are obviously contributing in a big way to bring digital and leverage digital. Let's talk about an example of a farmer. So when I took charge as the founding CEO about 3 years back, we said, okay, we are perhaps the first central bank, RBI has set up an independent company, the Reserve Bank Innovation Hub. So when you say frictionless finance, for whom and what? I mean, it's too much of a motherhood statement. So we said, let's look at 120 million farmers. Are they able to get a loan of $1,800 instantly? Because it is rule-based credit. There are, I'm not going to detail, but there are A, B, C, D, E, which a bank is supposed to look at and give a loan. To our utter shock, when our team went to the field, they were surprised it takes 4 to 6 weeks for a farmer to get a loan. It takes about 5 visits for a farmer to get a loan. And most of the banks were still doing paper, although it was 10 years down the line when we started eKYC in the country. So we mapped the steps and realized it is 9-step journey, and that 9 steps can be done not in 5 weeks, but in less than 5 minutes.
Wow.
That is what we redesigned, and the governor announced it that today 7 banks are doing it. An instant loan, 9 API calls. I know for somebody like Jitendra or maybe Karthik, and what's the big deal about it? The fact is, unfortunately, most of our banker friends are not reinventing themselves, despite the best digital rails. I'll talk about, so what we are doing is we have launched a unified lending interface. The governor announced a couple of months back that a new trinity in India is not just JAM, ULI and UPI. Unified lending interface is going to be basically a common platform, or it is already in pilot stage, and it will make lending seamless the way payments have been made seamless by UPI. So we have unlocked about 50 data sources and multiple services which lenders can use in a plug and play manner to actually reinvent, reinvent lending.
Okay.
On Gen Z in particular, I would again just like to mention, we've done a study that Gen Z, you and I all know the numbers. If you don't serve Gen Z, then you are history.
Yeah, right.
Really in India, right?
Right.
But do our financial institutions understand what a Gen Z needs? Unfortunately, no. So we have a project called a design lab, under which we are looking at creating toolkits so that the financial institutions can design, the right products using design thinking methodology to serve the needs of the Gen Z consumer. I'll stop here.
Great. Great. And whatever you mentioned about Gen Z, I think even senior citizens, right? I see a lot of them, especially with the UPI wave in India. I think a lot of digital banking is happening more and more in India. And I think thanks to the innovators at RBI and NPCI and other places. So that being said, I want to go to Karthik. Karthik, as per a recent McKinsey report on global banking, the past 2 years have been the best for banking since before the global financial crisis, right? And in fact, banking generated more total profit than any other sector around the world. Karthik, in the US, while there are some tumults such as what has happened with the Silicon Valley Bank overall, how has the growth story been in banking sector in the US? What will the new Trump administration change things in this sector?
Hey, yeah, good afternoon, good evening, good morning to everybody there. Thank you for the privilege of coming to speak. The one thing I would like to go ahead and lead off with is the opinions I'll express are my own and not necessarily that of my bank. So I have to get that out of the way. But I would say it's a great question that you raise. I would say the foundational areas, the noise has been there in terms of some of the banks and what they've not the Silicon Valley Bank type stories. But I would say that was more due to, the fitness of how they managed their book in the back, right? The growth is still there. I think coming out of events such as COVID, coming out of certain geopolitical movements right now, the consumer is still at the front and the center of everything that is going on right now. And that's what you're seeing in terms of the profit right now. I would say the biggest change and the shift in the banking space has been more that centricity and what I would say that stickiness of the customer and the services to do that. Because I'm just going to go through 2 statistics right now. There are over 4,230 banks from the smallest community up to the biggest in the United States. Also, what's also there too are 4,604 credit unions too, which are also alternate money vehicles into the consumers out there. And so everybody is eager to go ahead and provide services in the deposit line, in the lending line. And typically you have to have enough deposits to do lending. So the focus has been more towards deposits were very reasonable and free flowing during COVID, and they've become more of the sought after commodity as we've come out of it with these failures in the market space. So what's happening there is the focus on consumers deposit, also the shift in digital, and I'm speaking to our entrepreneurs specifically, and I would say the service affinities of not just the traditional audiences, but the newer gig workers that you can go ahead and use to have convenience and to have your bank with you is becoming more and more there. To your question about the Trump administration, that takes effect in January, after January 20th of this year, and indications are that there is going to be a big pull back on regulations as to how and how much and how deep. Banking is definitely in the biggest space. If you've not been watching the news, part of his campaigning efforts has been to go ahead and court the cryptocurrency and Bitcoin folks very, very tacitly. A lot of this has been curtailed through, I would say, heavier regulation and regulation entities, and unleashing that is going to be probably a huge opportunity in terms of how I would say the modern gig worker wants to go ahead and interact, pay for their activities, borrow for their activities. And there's going to be a lot of scrutiny around that from a regulatory standpoint to make sure that there is not a harm, there is not an unfavorability to what is referred to by when I sit with our regulators as the underbanked, and any biases or lack of community reinvestment, because that is going to be the bigger focus on that story there. I think this is going to be a bigger shift and a bigger opportunity space for our entrepreneurs, because I would say of those banks and credit unions that I've mentioned, a lot of them have technology capability. However, it's only the upper tier of those banks, the top 100 maybe, that have what I would say the depth of development in technology and self-entrepreneur capabilities that are there. The rest of us typically tend to be either the fast followers or looking for partners in that space
Right.
to go ahead and work on that. So that's going to be the interesting tangent for our entrepreneurs.
Yeah. That's thank you, Karthik. One healthy trend in the Indian global banking and fintech sector has been collaboration between the startups and the banks, from savings accounts to co-branded cards, etc. And that's why we have somebody from the newer banking space, Jitendra Gupta here. So Jitendra, I'm going to come to you now. Neobanks typically offer products of traditional banking partners, but in a more tech-savvy, digital-first way, right? Jitendra, what innovations are exciting you in the financial services space, especially when it comes to AI and ML and data analytics to improve customer experience? While banks are playing the wait-and-watch game, are fintechs taking the lead on leveraging AI? In particular, banks, neobanks like you.
Sure. Thanks, Venk, for inviting me here. If you look at any bank for that matter, not just Neobank, which starts at this point of time, their operations, especially the last 2 or 3 years, in my view, they have the advantage of thinking everything fresh in terms of what's happening from a technology standpoint, what are the new technology stacks or the infrastructure stacks available in the last 5 years, specifically in India, when a lot of changes happened. And I think that is where that was a thinking where even Jupiter got started back in 2019, that there is this Aadhaar which is making the KYC simpler, which was not the case earlier before RBI allowed the video KYC project. Then similarly, like the UPI made the digital payments simpler, which was not the case earlier. So even if somebody had launched a neobank back in 2016 or 15, in my view, it was sort of set for failure, because the acceptance or the payments, which are the core function for any bank, would not have worked otherwise. And the third thing is, like, even if you look at customer service, if you're sort of building the bank today, you are thinking data first approach. You are thinking every stack which can leverage the data, which can leverage the AI ML tools, which can leverage the data pipelines, building the features into a common place, and that sort of can be leveraged to provide the personalized experience, be it on the service side or be it on the product side. So I think again that offers a very unique opportunity in today's world, that you can offer a very personalized customer service operations as well to the customer, which like today all of us praise about Amex or Amazon or Swiggy, let's say in India. I think all of these guys have done well in my view, because they leverage data to the extent where the customer experiences could be influenced. So I think that is where I see the benefit coming in banking. Any bank, not just Neobank, who is building fresh today. And I think from our standpoint, the way I see in the industry, things are happening. The data is becoming more and more key to deliver the services and the experience. The data is also helping you design new products, which is very specific to a micro segment of customers. Like today, any traditional bank wants to launch a product, it's very difficult for them to distribute to a micro segment, because it's either not commercially viable to sort of go out to that segment, or financially viable to operate a small segment of customers. But in a digital world, is both the viabilities exist, because you're not building anything new infra wise. Your same infra, but can be pretty much segmented from a value prop standpoint for a segment of customer, which is just 100,000 customers, let's say. So I think that is where I'm seeing lot of abilities which any new age bank can deliver in today's world.
Great. Very fantastic. Rajesh, I want to come back to you to, when you spoke about what RBI innovation is doing, you also mentioned at a recent talk that a survey by RBI Innovation Hub found that 80 to 90% of banks in India are excited about AI, right? But they're still in the wait and watch mode. I think I want to take the same question to Karthik too. In the US, is it still a wait and watch mode? But coming back to Rajesh, why is it that is the case, and what will it take to push adoption of AI in the Indian banking space?
So one is at the talk, I had mentioned this because there is so much excitement about AI and Gen AI. So on Gen AI in particular, I have a number of things I can tell you. That the fact is, banks love, the employee loves going to, any of those LLMs and figuring out some answers, whether it is banking or anything.
Right.
But is it being used by the banks, the last employee in the branch, to check what the rule book of a bank says? If I go to them, I want a tractor loan, the employee should be able to answer it basis what AI and Gen AI can do for them, including going through the RBI rule book and the bank's rule book. It should be as easy for them.
Sure.
But unfortunately, I think one of the reasons is, what should I say, as the techies call it, hallucination. They're not sure whether it'll give the right answers all the time. You are aware of some big tech companies who actually had to withdraw a customer-facing chatbot, right? You are aware, I'll not name them.
Yeah.
Employee-facing is the one thing which they are trying to do. That's one. Secondly, scarcity of talent. Fact is, I have a project, we are talking about mule accounts and frauds. I mean, it's so difficult. Jitendra may still be able to afford a person with 5 years experience pay, 500,000, sorry, not 500,000, 5 million Indian rupees salary. But being a RBI public entity, we can't, right?
Yeah.
With 5 years, again, that's become the norm. Any good guy, my head of data science interviews and my HR comes back, sir, they're looking at this kind of a 4 million, 5 million salary. So that's a challenge. Third, as I was speaking, we are not doing enough to retrain and build internal capacity of the current technology folks in the banking institution. That needs to be done. Now,
Right.
fourth is the fact that, let's say a lot of entrepreneurs are on this call. They want to build a product, lending or whatever. They need data for that. How
Right.
will they get data? There's no data for them to build a model. They end up building synthetic data or buying data from other geographies which might not work for them. So these are some of the serious issues. And then lastly, the banks that I've spoken to, they're not sure of the ROI.
Right. Right.
Whether it's worth the investment and whether I'll make money. So we are at that a bit of an early stage, a lot of excitement. Every technology wave has that. And the banks will put their money in it once they are kind of, imagine how will I go to my board and say, give me $100 million because I want to hire hundreds of data science engineers, which one of the examples is DBS Bank did that.
Yeah.
We had a good discussion with DBS Bank. I think it's a 500-member team. And he's also told us, Sameer, that he told us that it works. I am actually, ROI is served. So these are some of the challenges which we see today in a major adoption of AI.
Yeah, Rajesh, I think that is in general, that is a trend. Even in the US, I have talked to banks, to people in the bank, and they say AI, if people are they're not able to understand what is the ROI, on an investment in AI. And that comes to Karthik. Karthik, can you give us a quick lowdown on how AI, especially Gen AI, is being adopted in the banking space in the US?
Yeah, Venk. So it's a interesting evolution, as mentioned before. I'd say right now it's driven a lot by, like you said, a couple of factors. A regulatory space is the top of mind one, where a regulatory space right now, the big thing is when you're looking at a large language model, the large is the part, right? So the regulators want to make sure that what you're able to do, it's like when you used to go to school and have math class, right? And you had to solve an algebra problem. The teacher did not ask you for just the answer. They wanted you to show your work and show the repeatability of your work. And that's where the regulators are coming and saying, in using it to make determinations for loans, determinations on customers, there has to be a repeatability. There has to be a control. And this also goes towards that skill set mentioned before, that you need to go ahead and prove with confidence you're not disadvantaging people and your customers specifically and your communities, and you're able to go ahead and show no harm. That is one of the bigger burdens coming in right now to the outward-facing customer. Where it is starting to go ahead and take hold in the U.S. banking space is on the inside of the bank, and what I would call four walls models. Four walls models, the large language model becomes more of a captive model, right? You see it with Copilot from Microsoft. You see it from Desktop LM, where you're able to go ahead and confine it to a space, and it helps with worker productivity. That's where the ROIs are starting to hit right now. From a customer servicing perspective, you have to look at all these rules and procedures inside of a branch. You're able to ask the AI a question as opposed to a help desk, or look it up yourself on a search on your internal intranet or browser. That is where it is shortcutting it. And that is where there is general acceptance from, I would say, your regulator community, and also simplified spaces. Looking back on your contact centers, your call centers, when you have to look back, we have to look back at all of our recordings, right? To make sure that there is no impropriety to our customers to be able to use it in those spaces. That's where it's starting to get there, where there's a big discussion around what is known as agentic or automated LLM, right? Where it is able to do that. I think at the chatbots on the outside, I totally agree with that. There's been enough noise there and enough scares with basically the hallucinations. On the inside has been a different story, where you're able to have it captive to maybe your knowledge bases, your servicing on the inside. That has been the case. The challenge, though, is in monetizing that for entrepreneurs, it's difficult. So on the outside, as they're starting to get into, I would say, more limited language models, believe it or not, and also to very specific, I would say, closed loops of repeatability, that's the case. You'll see some of the older technologies pre-AI LLM coming into vogue. And I think you and I have seen an interaction of it, like such as machine learning and pattern learning, where that can actually be more popular. Also, the energy and cloud cost is a lot better in some of those. So people are tending to back into maybe more safer lead ups or ramp ups into AI LLM. It's still an evolving space, and there's a lot of caution along the lines of reproducibility, compliance, and I would say the ROI to go ahead and make it happen. But I think we're going through the evolution of one phase into another. So it's going to go ahead and be very valuable. Right now, I'd say there's huge opportunity cases to go ahead and look at this. And I think right now it's tackling those issues that are going to go ahead and make it mainstream.
Great. I was told that there are a lot of questions, so let me quickly go through some of the things which I had written down. Now, at the one of the things which I observed was at the Global FinTech Festival, the RBI governor, and this is to Jitendra, the RBI deputy governor made a statement that fintechs are yet to establish the trust that regulated entities have. How do you think that can be developed? Since Jupiter has procured an NBFC license and a PPI license, does that make it easier to collaborate with banks and other regulated entities? How difficult is it to scale your business without having such licenses?
Sure. So I think I would say that in India specifically, the world has changed a lot. Like in my previous startup, which was there from 2011 to 2016, and this company. So I think as a fintech entrepreneurs, we were always used to building businesses by looking at the regulatory loophole and the things which banks couldn't do because they were overly regulated. And we said that this is the space where the market size exists. We can build a specific use case and let's create a business around that. And then when it scales, then we'll go to regulator and try seek relaxation. And that was the approach, I would say, until 2020, 21. Every fintech entrepreneurs took, including myself in my first venture. But I think the last 3 years, the regulator in India has made it very, very clear that we don't want any business to be built on basis the regulatory arbitrage, and which means the principles of doing the business, which is protecting the customer interest, following the rules in spirit and law, for sort of not following any shortcuts around how you manage your data or privacy and all of that. I think those principles have been made very, very clear. Now, while some entrepreneurs see this as draconian and they sort of complain about it, that the regulator is tightening and this and that, I personally see this as a very healthy thing for the ecosystem. So yes, it increases your compliance cost for sure. I must admit that. But I think if you want to build an institution for the next 20 years, 30 years, all of these are very foundational things and are needed. I would, though, at the same breath, I would say that for a smaller company or a smaller startup, it makes the life as much difficult to meet all of these compliances on day one. So, so maybe there is a scope somewhere exist to give some relaxation. But I think if somebody expects relaxation on KYC or on money laundering checks, I'm not sure whether those are viable ask from any entrepreneur to the regulator. But overall, I see this as a very, very sort of a signal which regulator is giving that we need stability in the financial ecosystem. And from an entrepreneur standpoint, short-term pain, but there's a long-term gain. And I think that's the way I see it.
Yeah.
Now, the specific to Jupiter, what you asked, whether we got these licenses and this makes our job easier to partner now, I don't think so that has any bearing. So, so I think the licenses were rather the outcome of the governance which we followed, and the compliances which we were following with our partner bank, with our customers, and within internal processes. So, and I think that helped us secure licenses rather. So, from a bank standpoint, like whatever compliances they are supposed to, or they're accountable to the regulator or to their customers, we follow exactly same standards. And I think this is where, as I said, the compliance cost has increased, and this is where we have to pay a lot of attention. So, one of the real thing I will tell you, like earlier, back in 2015, I remember we thought of a product and we could launch the product in 2 weeks. And it's not possible now in today's world, especially where the compliances are expected from day one. So if we think the product, first we have to think the regulations, we think the compliance, we think all the certifications. So typically the product cycle, launch product cycle from 2 weeks, it has gone to 3 months. And I think that's a hard reality. But can you say it's good or bad? As I said, like it's good for the long term, pain for the short term. But overall, I think any entrepreneur, anyway, in my view, has to take a long term view.
Yes.
And if they want to build an institution, so overall, it's a positive thing.
Yeah. No, by the way, I just wanted to add here, Jitendra was, he's a serial entrepreneur. He was one of the founders of PayU, which actually enabled businesses in India to accept digital payments. Am I right, Jitendra?
Yeah, Venk. So I started this company, Citrus Pay, which was back in 2011, and we sold that to PayU, and then we were running PayU in India for 3 years after selling.
Great,
So,
great.
so yeah, so but we enabled more than a couple of lakh SME businesses to come online.
Yeah.
So I think that was a very interesting journey.
So Jitendra, if anybody can make this success, it's you, right? So with your experience. So Rajesh and Karthik, I have 2 quick questions for you. Rajesh, to you, financial fraud is one of the biggest concerns today, right? Reserve Bank Innovation Hub recently developed an AI and machine learning model to help banks and financial institutions detect mule accounts. Rajesh, could you share insights on how this has helped address the issue? How else can AI help in fraud detection? Rajesh?
Rajesh, you're on mute.
Oh, sorry. But just like to put this, the initial point is there is a lot of rumor in the market, especially about our mule hunter, that we are competing with fintech. Let me first address that. So, and then you know that there is a lot of media speculation going on.
Yeah.
And come on, the Reserve Bank of India and its subsidiary need not compete with the fintech. Fact is, we did again a study. We do a very methodical job. We spoke to 10 banks. And because we're like, why is the fraud becoming a pandemic? I mean, why are NPCIs doing a lot of stuff, but NPCI can work on UPI pipe? But over the last year and a half, you've been watching carefully, the frauds are no more UPI. They are done using NEFT, RTGS, and all sort of methods. People go to a branch, break their FD in a digital arrest scam, and then transfer 2 crore rupees. It's no more, a few dollars. It's like getting close to $500,000. And today the newspapers did, give a number which is closer to what I was expecting. About people have lost about $1.5 billion in last 9 months. So we said that why is it that banks are not able to detect mule accounts early? So we are surprised that most of the banks use what they call as the business rules engine. If but blah blah blah, some rules which are static in nature, and then a list goes to analysts who spend some time to finally say maybe it is a suspected mule. It used to take about 1 to 2 weeks. That is when we realized that we have to really prove to the bank that AI ML can do much better. So our job is nudge the banking system to think innovatively and not be a service provider to them. That's what I would clarify. Hence, we set up a data science team. That data science team, we asked a few banks, are you interested? And a couple of banks are very interested. Actually, more and more are interested. And we went to one of the things we knew was a challenge was data sharing with PIA data. We didn't want to go there. So I have followed a model where my team goes on-prem and uses the data of the bank and then develops a model. So that is the early results are very encouraging. And banks are now realizing, and now it's become kind of at least 20 banks that I know of are excited. Oh, so actually AI ML can do it much faster and much more accurate rather than a human looking at a business rules engine. So that is what our model is trying to do. And the results are very encouraging, honestly. And the banks are pretty excited about it to the extent that I have too much demand. So I don't want to tell the bank, but the funda is, guys, go and hire a fintech, will do it for you, right?
Right.
We are not. So we have proven the point and we'll just deploy it in few banks and prove it. And then, as we always do in number of other projects, we'll move out.
Great, great. So, Karthik, before we take the audience question, this final one for you, maybe it's a bit controversial. While all the focus is on AI in the financial world, the resurgence of Bitcoin, especially after Trump's election, is quite a story, especially in today's time. Do you see any disruption with cryptocurrency in the near future? Because I see that is an opportunity for Indian entrepreneurs. So that's my question to you.
Yeah, and I'd say it's a very big opportunity. It's going to go ahead and depend on how fast Trump is able to go ahead and bring down the barrier walls to that industry. In this case, the crypto made a big splash, and we started seeing initial spaces where it was sort of like a wealth property, right? You could sweep in your money and sweep out your money to various coin companies. And I think from there, it became sort of, is this more like an insider trading, or I would say a speculatory market? But then people started using it for payments and other mechanisms, and that's where it got curtailed. I think as some of those agencies start to go ahead and see the change in regulation, it's going to open a new market if you're able to go ahead and deal with it, and not just in the transactive space, like meaning buy, sell with Bitcoin as a currency, but also borrowing against will be one of those spaces, but also loyalty points, right? A lot of companies out there offer, loyalty points to customers right now. Those are outside of the banking ecosystem right now. Airline miles, coffee drink, tea drink makers that accumulate points. If Bitcoin does come about as a vehicle that people can go ahead and create their own flavored version of that, no joke intended there. Then at that point in time, how you're able to go ahead and tap into that market with the regulations being acceptable is going to become a big consumer draw. And it's going to go ahead and be something that the banks need to participate in via partners. The larger banks will try to figure out how to go ahead and build it themselves because they have the weight to do so. But, of those 8,100 that are not in the top 100 banks, they are looking for an entrepreneur, a partner, to go ahead and create that marketplace, that in-app experience on their mobile device, that in digital situ situation that they can go ahead and see it, to create basically their participation in that Bitcoin and crypto environment. And it's going to be multiple coins. It's not just going to be one. So it's going to go ahead and open up to many other possibilities. And why? Maintaining your own rewards points, maintaining your own ecosystem, it's going to go ahead and start moving to these spaces if people can go ahead and do it, because it's what I would call like currency and not actual currency. And when it starts to become transacted for real human activities, that is the opportunity that people are just looking around to say when those walls fall down.
Yeah. Thanks, Karthik. So I'm just, we have so many questions, but let me take a couple of them. Audience question 1, I think it is from Vinay. I think this goes to Jitendra. Jitendra, with the phase 1 of AI integration of virtual assistants is largely successful, is it largely successful in neobanking? What is the next focus purely from a fintech AI perspective? I hope I'm reading it.
Yeah, so so I think it's right that in my view, the new age banks are most suited to leverage the AI technology. So like we at Jupiter right now, as we speak, deploying in our customer service function, and which will help not just customers, but also the agent who's serving the customers. So we are sort of leveraging the tech for both purposes. And the next one, which we are contemplating and still in works, is that can we provide a financial coach to our users? And I see that as a very big opportunity which can be leveraged using the Gen AI function, the tool. Because today, if you look at it, the customers are not comfortable sharing their personal finances to the regular financial advisors. So they will share part data, they will share part goals, they will not share everything. Though financial apps like us, we have more access to the data thanks to the consumers giving consent to access the data through account aggregators and the camps data and all of that. So we have full view on the customer's finances. And when they ask for, so we feel that a company like us is a better place to provide advice leveraging their data, which they have provided us access to, and the advice can be more personalized. Rather than a generic that, okay, if you are 34-year-old, you should have an insurance policy of 1 crore. I think it's a very generic advice which has a less relevance to a consumer in context. So financial coach is one area where right now as we speak, we have just initiated the work. In my view, it will take us a year to deploy and see that the guardrails are being put. We are not giving advice around options which could potentially make bad decisions to the consumers or get them into something which is against their risk profile and all of that. So I think we that's the area which we're working on.
Great, great. I think there's another question. I think I will let Rajesh answer this. This is from Anushia from Bini World Innovations. She says, not just loans, even now opening for a current account, the nationalized banks are making us visit multiple times. But if you see private banks, they come home and do all the processing. I don't know if you can take this.
I really don't have much to say. The only thing I can say, we are working with public and private and nudging both of them to reinvent their customer journey. And the only thing I would add, nothing against private banks. You might have faced good experience, but pretty much my 30 years of experience shows, I used to think like you. They are pretty much in the same boat.
Great. Okay, maybe Karthik, you can, this is a long question, but I'll try to summarize it from Manikant. He says, what would be the scope for a person with almost no experience in banking and finance, but in tech and business management to build an investment banking incorporating AI and ML for the pattern recognition and data analysis and future projections? Is this advisable, or should I get more experience in the investment banking area or find a co-founder? How will the new regulations, or how would you look at it?
Yeah, so I think sometimes you need to go ahead and have a balance of both. I think a partner is good in terms of understanding the regulations and the hard rails in that space, because that's something that you can never really move outside of, is those hard rails. On the other side of it, I think you should go ahead and look at it and say, what are the problems people are trying to solve? And where can this go ahead and create, for lack of a better phrase to the entrepreneur, the value or the money to go ahead and gain on that situation, right? These are things that some of the larger, and look at basically the entire ecosystem as to where the opportunity is. Just because maybe some of the largest investment banking houses are able to do it, doesn't mean that the smaller ones could not go ahead and benefit from that expertise, right? A simple example might be in the AI space is investment reports, right? Quarterly statements. A lot of the big ones go through their intelligence by using their AI and their ML to read those, because the time it would take for a human to go ahead and look through those and provide economic estimates, pattern analysis, stocks to go ahead and create sector opportunities or not, they can go ahead and put the investment in, and they can put in the heavy lift to do do so. A lot of the smaller ones have to end up buying their market data or their information at that point in time. If you're able to provide a better source stream to them through your own AI, for example, and your own pattern learning based on reading those reports, creating an economic trend to a sector, petroleum, energy, climate, manufacturing, whatever it may be, that is a space where knowing what the rules are in terms of the research would be useful to an investment banking house, but being able to sell a new stream, you can monetize it to those who maybe don't have the ability to build it for themselves or don't want to go to the monopolistic groups of the top investment banks who are using the research, although they shouldn't be, for their own internal trading, as well as what they're feeding out to the industry. So there's an example where you can go ahead and take that tacitly and say, how can I go after that market that may not have the ability to do so, but is still a relevant market, wants to buy, and can basically go ahead and do that. The expertise of making sure you don't trade on what you actually provide on research is where an example of a partner to help you in the regulatory space would provide you that advice.
Okay, great. Okay, I have a question from Inshara. While AI is being used to fight financial fraud, AI is also increasingly being used in fraud, right? From morphing, audio, videos, etc. How can consumers identify such fraud? Maybe Rajesh, do you have any thoughts on that?
I would actually look to Jitendra, but see, one of the things is, let's take the example of digital arrest or e-arrest, which is the biggest form of scam today. And the other one is investment. So in digital arrest, there is a morphing and a video, you will get a call on Skype with the Mumbai police out there, 10 policemen walking. Fact is, yes, AI is used. But why are we thinking that no, I get scared? They tell me your Aadhaar is used to send a drug packet to Thailand and your life is finished. But why do we get taken in? The police has been advertising, we do not do calls like this. I mean, at one stage we are saying Indian government and banks are not so evolved. All of a sudden, what makes the consumer think the government of, Maharashtra, the police fellows will call you on a call and tell you everything has to be done on a call? I'm sorry to say there is a huge issue of consumer awareness more than AI. And nothing can solve either consumer greed and trust. Investment scams are happening because of consumer greed.
Sure.
They go ahead and invest because the WhatsApp group says you will double your money in 6 months.
Yeah, right.
So I'm just saying we can't really blame technology. And the simplest analogy is given just because India has built expressways. The first one was famous one was Delhi Agra. There were too many accidents that happened. So should the government stop building expressways? So guys, I mean, public has to go beyond greed and fear. And this is a reality of any technology tool. But Jitendra, sorry I came in.
No, I agree.
Yeah,
I agree
Jitendra,
with
you have.
Rajesh. I agree with Rajesh that greed and fear are the primary reasons for these frauds. Technology has less role to play. Technology is just a means, but ultimately, the greed and fear is what causing these frauds and issues. And just because there is a mechanism for a greater benefit, which is misused, doesn't mean that mechanism is bad. So I think that is how I personally see it.
Great. So I think we are coming to the end of the webinar because we have 1 hour and we are almost there and we have a lot more questions, but for me to go through this and say what you guys have already discussed and what not. So I am just, give me 1 second, I'll just go through it quickly. And okay. But overall, great webinar, guys. And I want to thank Rajesh, despite your being under the weather, taking this call. I want to thank Karthik for getting up so early in the US. And Jitendra, thanks for encouraging entrepreneurship as we go along and appreciate all your time.
Thank you. Thank you.
Thank
you for having us. Okay.
Yeah.